Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
Kate, welcome to this episode of the Australian Finance Podcast. How are you?
It is good to be back for a wonderful episode on what to do with your tax return.
Yes, we've got 3 things you can do with your tax return. Is it finance or finance podcast?
Finance for me, but
yeah, finance for me
we
too.
do like ants.
We do indeed. So today we're talking 3 things you can do with your tax return.
If you get one.
If you get one.
Fingers crossed for you.
I'm going to be paying tax this year. I know that for sure.
Yeah.
How about you?
Definitely paying tax this year. I don't think it's a bad thing if you don't get a tax return because it means you paid the right amount of tax. Like, it's never going to be perfect. I don't think if you have ever got a $0 tax return and you haven't had to pay any money and you haven't had any money given back to you, let us know, because I've never heard of that happening.
No,
There's always a few dollars at minimum.
Well, you're going to claim at least something, right?
Yeah.
So you think that, unless you have like $0 income and you paid 0 tax.
Yeah.
If you're in that camp, don't let us know about that. But if you have earned some money.
If it's just you've done deductions, you've had a job, you've had various things going on, and you've submitted your tax return and it's come out perfectly,
then let us know. You are the lucky winner of a free course on Rask Education. I don't know, we're giving away something right now.
No, but it just means you have paid the right amount of tax throughout the year. Yeah. So it's not a bad thing that you didn't get a tax refund. But if you have sold some shares throughout the year, like both of us have, you might have to pay capital gains tax.
Or losses if you're down this year.
Yeah. But I'm just talking about how we've ended up with tax bills.
Okay. So, if you do sell your shares at a gain, you don't typically withhold your own tax, right? So a lot of people will have capital gains tax bill. If you sell your ETFs at a profit, you may also have capital gains tax to report.
Yeah, if you've received some dividends or distributions from your shares and ETFs.
Yeah. Conversely, though, if you've sold shares at a loss, you may carry forward some losses, or if your employer's withheld tax and you've got heaps of deductions, like you're a business owner or a contractor or anything like that, you may actually come out with a tax refund. So, Kate, every year, about 14 million people, according to our notes, do a tax return.
Yes.
What's the average return that people get?
Well, according to H&R Block, and I couldn't identify the source via the ATO, so I'm not 100% sure on this one, but they said on average it's about a $4,000 tax refund.
Maybe that's through them, so they kind of like...
that could be looking at their numbers.
Yeah.
And so they'd have a lot of PAYG or gig economy people probably using their platform, so probably skews the numbers a little bit.
Yeah. And I have heard from the ATO, well, not specifically from the ATO, but from like big accounting places that the average return is in the high 2000s up into the $3,000 range. So that's why we've specifically named this episode around the likely amount that our listeners would get back. So we can talk about what we can do with that extra cash injection. So I guess where do we start from here?
Yeah, I think the first thing is, I don't know if the episode will come out pre or post this episode, but just thinking about what your financial goals are at the moment, because the end of financial year is a good time to reset the things you've set at the start of the year. Maybe you want to go in a different direction. Maybe your job and your life's changed completely since then. And so it's a good time to reflect on what you actually want to do with your finances for the next 6 months and what the short, medium, and long-term goals are. And then thinking, if you are getting a refund, because $3,000 is a really decent chunk of money, what is the next best step you want to do with your money? And so whether that's, we'll run for a few ideas in this episode, but I'm just thinking, how do you want to use that money to propel yourself forward for your financial future or just your future in general? Because I think it's really good to give it a purpose, this money, because otherwise it just goes into your general revenue accounts.
Consolidated revenue.
Just gets frittered away on general lifestyle, buying lettuce, buying coffee. So I think it's really good to give it a go, really think about what you're doing it, and just so you can go okay, this is what I did with my tax return this year.
Yeah, and this is an opportunity for many people that don't save a lot of money to really put some cold hard cash in the bank or to start an investment portfolio.
Yeah,
$3,000 is a fantastic amount to start an investment portfolio with.
absolutely.
You could buy a few ETFs. You could use micro investing platforms to spread it out. You could do many different things. Even if you maybe don't need the money and you might think, well, I'll just put it into super and I'll claim the tax deduction for that next year. So there are so many things that you can do with it. The important point is to just make it work. A lot of people over the next year, Kate, I think are going to find that, maybe things get a bit more expensive. Maybe their lifestyle gets a bit harder to afford. So this money, if you use it wisely, is going to really have an impact on your living.
Yeah. So I think the first thing you could do with it is paying off debts to try and get yourself back to an even starting point, or adding money to your emergency fund, because $3,000 takes a long time to save up to build that emergency fund. So it could be a good whack of money to kickstart that emergency fund if you want to have that 3 to 6 months of living expenses put aside, or just going through and closing down credit cards that you've had hovering over your shoulder for a while, whether it's you've got a couple of buy now, pay later debts you want to just clear off, personal loans, payday loans. I feel like every year when we talk about this, there's new ones that have been invented. There's a lot of different buy now, pay later alternatives now. So just cleaning the slate clear as much as you can. Maybe your debt's a lot bigger than $3,000, but that could make quite a meaningful dent in it.
Yeah, and if this is you, you might have multiple different types of debt. I would probably say oftentimes the payday loans and buy now, pay later are the two worst. So those ones can really bite. So can credit cards after that, because they have high interest bills and fees. So getting that down as quickly as possible is smart.
Yeah.
And I think the order of which we're saying this is important too, Kat, because we're saying to do this before we say go and invest, before we say go and do other things. Get rid of these things because it's compound interest in reverse.
Yeah, and if you've got a few different debts with different providers and you're not really sure the best order, give the National Debt Helpline a call, book in a meeting with a free financial counsellor. They've become a lot more accepted now because Scott Pape, the Barefoot Investor, became one and talks about it a lot more because there wasn't that much awareness of their existence before. They're a fantastic resource, and you could go, okay, I've got this money that I've got for my tax refund this year. What is the best way I can use it to help put my best foot forward when I'm trying to deal with all these debts? And they'll give you a better strategy than we could possibly give you on how to deal with this.
Yep, I like it because, we've all probably got those little debts niggling away in the background. Even if you've got a mortgage, you could put the $3,000, if it's your emergency fund, stick it in your offset account. And you save more interest because interest rates have gone up. So you're saving more by keeping it in an offset account. That's a great idea. Okay, what else can we do with it?
Yeah, I think the other thing I wanted to mention earlier is just remember that your tax refund is your money. Sometimes we treat it as play money or money that we can use just for
Splurging,
go off and buy something big that you wanted to buy. But it is your money. It's not just sort of free government money. So I think you really need to treat each dollar the same as you would from the dollars you earn from your paycheck, and just keep that in mind when you get that return.
Yeah, it's real money.
Yeah, and make sure you do what you really wanted to do. Otherwise, you might look back in a couple of months and go, I have no idea where that money went.
Yep.
That's definitely...
It's a really good point.
When I looked at a couple of because if you go to the ATO MyGov tax website, you can see all of your historical tax return, refund, or what you paid.
Yep.
And you can see it sort of in a list, and you go, in that financial year, I got this much. In this financial, I paid this much. And you go, what did I actually do with that money? So I think it's good to have a really good record of where you spent that money. I think that'll be quite nice looking backwards when you...
Yeah, for sure it will. Yeah, great idea. And it's also interesting, you can actually see where the money is being spent, the tax money is being spent across Australia.
There's like a downloadable PDF.
Yeah, you can have a look and see, does it go to like the pension? Does it go to defence? Does it go to social housing or welfare or whatever? You can see where your tax money goes to. I think that's it gives you another tangible way to look at the money that you are actually paying is going somewhere.
There's a lot of tools now, so I definitely recommend linking your ATO account to your MyGov account, having a look, because you can also see it tracks down all of your lost super and tells you these are all your super accounts, this is your balance. It doesn't get updated every day. It's like a few months behind, but have a look at that. It tells you if your employer's sent your PAYG statements, that's all recorded there. You can record tax file details, all sorts of things are in this spot. So I'd recommend having a look through and just seeing what information they have on you.
Okay. So let's say I've got $3,000 coming to me My accountant says this is going to be paid out after, it's like say mid to late July.
Yep.
If I've been early, or it's going to come in, September, whatever. And I don't have any debts. What else can I do?
Yeah. So the other great option that we talk about all the time on the Australian Finance Podcast is actually starting investing.
Yep.
Maybe you're brand new to investing. Maybe you've been investing for a while, but $3,000 can make a big difference if you want to build that core ETF portfolio. Maybe you want to buy a couple of ETFs to give you a diversified portfolio. We've definitely done episodes on how to do that.
Yep.
You might, if it's a bit less, maybe you've only got a couple of $100, you might decide to try micro investing on a different platform. Maybe you want to start investing in a managed fund. There's lots of different options, but I think it's a really good way to put your best foot forward for your financial future and give those dollars a job. And it's money you didn't have before. So it's a good opportunity to put a little bit of money into the market. And especially at the moment, it's quite a attractive time to invest.
Oh, it is. Yeah. Prices are down. So, the thing you can do, if you have less than $1,000, you might want to choose a micro investing option. The reason why I say that is typically the minimum is $500 to buy an ETF. Some ETFs actually have a price that's above that. Like there's one ETF, the IVV ETF, which is over $500 for one unit. So you would have to have at least one of them. But if you do micro investing, your money gets pooled with other investors.
Yeah.
And then you can split it. They'll split it for you.
So you could have a look at platforms like Pearl or Micro,
Raise,
Comsec
Pocket.
Even Stake, which allows you to invest in US companies and ETFs with really small amounts of money. So there's lots of different options that you can explore.
Yep. And if you do have more than, say, $1,000, then you can start to get, 2 ETFs, 3 ETFs to kickstart your portfolio. You could look at things that we've profiled on the show before, like ETHI or VDHG or, Clean, CLNE. All of these are just options. You can go back and listen to those podcasts where we review those ETFs and have a look at them and see if they fit what you want to do. So I think this is a great time to kickstart investing. If you're not ready to invest, remember that the share market is a place for money for 3 to 5 years minimum. If you have goals that are going to require that money before then, do not invest it. Go and put it in a savings account or a term deposit, and you can use that for your home deposit. You can use it for overseas holiday or something like that. Which brings us to our third thing that you can do with $3,000, Kate.
Yes. So this one is about actually using the money in the short term.
Yep.
And I think it is very valid to actually use the money that you get in your tax refund for yourself and investing in yourself and your own life. And so my third one is going on an adventure, and whether that's exploring our own backyard and maybe visiting another state, or putting that money towards overseas airfare at the end of the year. We've been inside for a long time now. A lot of us have put off travel plans for years. And I think it's a really good opportunity. If you do have a bit of money and you have wanted to travel for a long time, you could use this money to go explore London. You might need a little bit more than $3,000.
Where would you want to go in Australia, and then where would you want to go overseas if you had to choose one of each?
Well, I went to Tasmania in January, which was absolutely beautiful. I haven't thought about anywhere else in Australia. I do love country Victoria. I like hiking through forests.
Yep.
So
you do.
Supporting tourism in our own local economy is a good idea. But also London. I think I've probably mentioned that in the podcast
Kate
before.
Is going to London.
This was what
the
I was
Australian
supposed
Finance Podcast is going to London.
Yes, well, maybe.
Kate does a very good, if you ever meet Kate in person, she does a very good British accent. One of the best money can buy. So ask her to do it when you see her. But so you've been to Tassie. Have you been to tropical Queensland?
Not for a long time, no. Maybe I'll go there.
No, it's very lovely. They've got good seafood. It's beautiful
weather. Go to SeaWorld.
Go to SeaWorld, yeah. You could see all the species there. I feel like if I was going to go overseas, $3,000 at the current rate is maybe enough to get you a flight.
Yeah.
Maybe. They're going
but
up
it could
pretty
go
quick
in your
fuel.
travel fund.
It definitely goes in your travel fund.
And then you're giving the money a job. And I think it's really important to balance that journey along the way. We talk about paying off debt and putting the money for an emergency fund and investing and giving every dollar a job. But it's okay to give the dollars a job to sort of help you live an awesome life too. So
many studies have shown, Kate, that paying for experiences is worth it. Paying for things is not worth it. So TVs and jet skis, not worth it. But experiences definitely are.
Hence I said go on a venture, not go to IKEA.
Okay. Well, IKEA is a bit of an adventure. You can get caught up in there.
Yeah.
So maybe you remember the IKEA just standing in line or trying to find the thing
Getting
in the
the
aisle.
meatballs at the end of the
Meatballs, yeah.
journey.
That's pretty good. That's pretty good. So let's just recap then. We've got pay off debts, starting with the nasty ones first. High interest, those that are due soon. Even family, you may have a debt to a family member. That's really rewarding to pay off. Pay off your debts, start investing, which can be done any number of ways. If you've got less than 1,000, you might want to consider micro investing. If you've got more than 1,000, maybe you can start your own brokerage account or put it in some ETFs. You can also chuck it in, a super fund if you want to claim a tax deduction too. And you could even put it towards a property deposit if you need that money and you've got a goal like that. Finally, go on an adventure. Kate's going to go to London. Or maybe even I've considered tropical Queensland. Palm Cove is a beautiful place. There are so many lovely places up in Queensland. Noosa, I was there recently.
Is there warm water?
Yeah, Noosa is where you want to go because you can swim there and you don't have to worry about all the irriganji and getting stung by jellyfish. I shouldn't have told you that. Now Kate's not going to go. Kate's not going
on jellyfish.
Go south. And I think those are 3 wonderful things that you can do with money. And this is real money.
Yeah.
So make the most of it.
Yep, give it a job. I would highly recommend something that I wish I'd done is write down where you spend each year's tax refund, or maybe you have to pay money to the ATO, which we're both going to have to do.
Yep.
So that
Ouch.
is not as exciting. So we'll probably push that back a little bit.
Yep.
Because if you use an accountant, you do have a bit longer to lodge your tax return.
Yep,
so
you do. And they can help you through that. So
Yeah.
if you do find yourself in a situation where you are going to pay a lot of tax, you may be able to do things like, get an agreement with the ATO where you pay it off in installments. There are certain rules around that. But it's better to be upfront with your accountant and let them know because the ATO, does charge interest if you don't pay your tax bill or whatever.
Yeah.
It's okay to make mistakes on your tax bill too. So if it does reverse, that's okay too. Just let your accountant know or let the ATO know. Kate, we can direct people to the Rask road trip now.
Yes, we've got a Rask road trip all about tax. So your tax crash course, we'll put that in the show notes so you can get a general overview of everything going on. We've got 2 tax episodes on end of financial year stuff to check out. We interviewed Tim Lowe, the Assistant Commissioner from the Australian Taxation Office earlier this year, I think.
It was.
We'll include that in the show notes. But he was really good and explained things really well and pretty much said the ATO is not there to catch you. They want to help you through it because they know it's not really fun for everybody involved. Yep. So if you are ending up with a tax debt, get in touch with them and work out a plan and a strategy to pay it off. They'll help you manage that.
Yeah, they want to. Just be upfront with them. It's okay if you end up paying tax as well. It's a good chance to reset, forge those savings goals for the year ahead. Think about how am I not going to be shocked by tax next year?
Yeah.
Start keeping receipts, create a Google Doc to track your spending or whatever, or use Frollo or one of the apps. And next year you might get a refund.
And even talking to your accountant, I had a meeting with my accountant last year and I was like, what should I be expecting for my taxes in the next financial year? What are some strategies to put money aside or minimize it? Or if I put this much in my super, how much would that change my tax refund? So you can workshop different scenarios with them as well. So that's another option.
I like that. That's great. So head to Rask Education for our courses. There's a course for everyone in the road trip. One of 6 courses, whether you're getting rich slow, you're paying tax, or you just want to save, or you want to set up your super, it's all in there. Rask road trip, it's all free. Please share it with your friends and family. Kate, as always, thanks for joining me on the Australian Finance Podcast.
Thanks for listening.